OpenAI is looking at Q4 or Q1 next year at an 850 billion valuation, but their cash burn is 14 billion. So they're looking at a cash flow break even in 2030. I guess the IPO for some kind of transparency on that. Obviously, we can't not talk about the Iran ceasefire and how maybe that's going to cause a medium-term catastrophe for us. So short-term, lots of volatility. Longer-term, obviously, who knows? But I think we've got this medium-term hit. I also saw this week that Global Ventures hit 300 billion for Q1, which is 70% of the whole of last year's deployment. And that's 4 companies absorbing 188 billion of that. Obviously, we know the concentration of investment has been massive, and with AI, it's only going to continue. So loads going on that we're not going to dig into. But was there anything in that you wanted to poke in?
No, Iran ceasefire maybe. I mean, that story is going to continue to play out over the days and weeks. Jamie Dimon referred to it in his quarterly annual letter.
It's kind of baked in, isn't it? Yeah.
Well, no, it's not baked in, but we'll talk about it later in the show. But I think inflation is the big watchword here, which then pushes up interest rates, which then might mean a rotation out of equities. So we would see 2002 all over again.
Hello and welcome to Upside, where every week we look behind the headlines affecting European venture. Today it is Lomax and my good self, and we're going to dig into Anthropic, Mythos, and the European invasion. We've got JPMorgan, they've got their annual letter out. What does Jamie Dimon usually get right and wrong? We're going to dig into that. 2026 mega IPOs, but who has $500 billion in cash? Where's the money coming from? Climate and sustainability, investing is back, but we can't call it that. Germany's 10 billion defense spend nightmare. OpenAI buys some friends, loving that, and predictions plus deals of the week.
This show is not investment advice, and the hosts of this episode may be invested in the funds and companies featured.
Lomaxius, how are you, my dude?
Good, man. We're flying quite. I feel very naked this week. We're flying, not flying solo. We're flying duo, flying very lightweight aircraft this week.
Yeah, we've got no Andrew, we've got no guests, we've got no Mads, so we've got no. So it's just me and you. But we've also tried to fill the docket with things that are in our wheelhouse.
Yeah.
So I would like to start with some things that I haven't put in the show, but have caught my eye this week, and see if anything is worth talking about, and see if anything resonates. So to start with, obviously we can't not talk about the Iran ceasefire and how maybe that's going to, what I think, cause a medium-term catastrophe for us. So short-term, lots of volatility, stuff's going to happen. Longer-term, obviously who knows, but I think we've got this medium-term hit. So I don't know if there's anything in that. I also saw this week that Global Ventures hit 300 billion for Q1, which is 70% of the whole of last year's deployment. And that's 4 companies absorbing 188 billion of that. Obviously, we know the concentration of investment has been massive, and with AI, it's only going to continue, but I don't know if there's anything in that you wanted to speak about. I saw lots of Euro cyber stuff happening, coming through the ranks. I don't know about you, but I'm seeing a lot more cybersecurity startups come through, which I think is understandable. Russian hackers logging into people's routers this week, I saw. Meta reinventing its AI strategy again. Poor old Zuckerberg. And a Brit, Adam Back, denies that he is Satoshi Nakamoto, the Bitcoin inventor. So loads going on that we're not going to dig into, but was there anything in that you wanted to poke in?
No, Iran ceasefire maybe. I mean, that story is going to continue to play out over the days and weeks. Jamie Dimon referred to it in his quarterly annual letter.
It's kind of baked in, isn't it? Yeah.
Well, no, it's not baked in, but we'll talk about it, I guess, in a little bit when we talk about that later in the show. But I think inflation is the big watchword here, which then pushes up interest rates, which then might mean a rotation out of equities. So we would see 2002 all over again from a kind of flight to capital from the equity markets, both public and private. So that's the one thing to watch. But at the moment you wouldn't know it, because as you said, in the private markets and the public markets, your equities are pumping. And as you rightly point out, global venture funding is absolutely soaring. I mean, there's very much a power law at play here. It's driven by a few companies, and predominantly OpenAI and Anthropic, that make up like the vast proportion of the numbers here. So,
and both listing this year, right?
Both potentially listing this year. OpenAI might spill over into next year, but they're going to be fighting to get out first to market probably. Cybersecurity again, we're going to talk about this in the context of the recent release of Mythos by Anthropic. But of course, as
I don't know what's true or what's not true in that, but the story is Have you read all about Sandwich Gate and how it all happened? It's quite, Mythos is quite,
It's quite
if it is
eye-opening.
true,
It's quite
there's depth in
eye-popping
this.
and quite scary for sure.
Yeah.
And then as for Satoshi Nakamoto, I mean, yeah, there's a new person every month now.
Yeah, the
So
55th. Yeah. I thought it was interesting that it was a Brit. So I can imagine some poor crypto guy in his basement go, "What? It's not me, dude. What are you talking about?"
just a few Brits get wheeled out. A disproportionately number of Brits get wheeled out as Satoshi Nakamoto suspects, right? I think.
But it's not exactly a slow news week, and there's loads going on. I don't know why. I don't know how that came about or what the finger pointing was, but yeah, poor old Adam. But if it's not him, if it's not you, Adam, I feel for you, dude. Shall we crack on with Anthropic? Because they seemed to have dominated the news cycle this week. So let me give a bit of context. Numbers first. So run rate has hit 30 billion. That's tripled in 6 months, now ahead of OpenAI, which is estimated at around 25 billion. But a quick note, you've heard me say this before. I'm in incessant nag about it. Watch out when the media transposes ARR for annualized run rates. There's a lot of PR going on in there. Anthropic monetizes at 8 times OpenAI's rate per user, 80% enterprise and aiming for break even by 2027. OpenAI are looking to get cash flow break even by 2030, but at 4 times the cost. What I found interesting when I was looking into some of the Anthropic news stories was that Europe is really on the map. EMEA is really on the map for Anthropic. So it's their fastest growing region. Revenue's up 9x, large European accounts up 10x. They've already got offices all over Europe. And when I first saw Sadiq Khan saying, "Please come to," I just found it all a bit silly and a bit sad. But there might be something in that, which is part of my prediction later on. And then Mythos, we were just talking about it, this incredible new powerful model. It's blown all of the benchmarks away. It's a general model, but they're focusing on cybersecurity. And they've only got, I think it's 40 people. What's the project called? Project Glasswing, I think it is. They've only got 40 organizations in the inside track of testing this new model because it's so bloody powerful. Trump called them left-wing nut jobs. They've been designated. I saw that a judge didn't block the designation of them being a supply chain risk, so that moniker still stands. They've also just acquired Coefficient Bio, which I think you wanted to talk a little bit about, Lomax.
Yeah, an amazing story there. Yeah.
And they're also looking to invest to 200 million into a $1 billion private equity fund with the who's who in private equity, GA, Blackstone, H&F. So there's a whole raft of Anthropic news this week. Which bits or where would you poke?
I mean, lots of interesting things there. Yeah, I mean, look, the numbers now surpassed OpenAI, so 30 billion run rate, as you say. Although OpenAI is at 25 billion, but it depends if you annualize their weekly revenue, you might also be at 30 billion. But let's say they're kind of neck and neck now, which means Anthropic has caught up OpenAI quite significantly, right? So
the Pentagon stuff either hasn't bitten yet, which is my assumption.
No, I don't think. No. I think that exactly. I think there's the breadth of the customer base. That they're serving more than there's more than 1,000 enterprise customers now spending over $1 million annually with Anthropic. That number's doubled since February alone.
And
8
they're
of the
still being
Fortune.
used by the Pentagon, right? I mean,
What's
they
that,
are still the vendor of choice. They can't just rip them out.
No, and eight of the Fortune 10 are clients. Anthropic holds 32% of the enterprise LLM API market versus OpenAI's 25%. So, and interestingly, the monetization, Anthropic is monetizing it roughly at $211 per monthly user versus OpenAI at $25 per weekly user, an 8x difference in monetization efficiency. So I think that's.
Have you seen OpenAI's? We'll talk a bit more about them later, but they've just launched a bunch of shops and their streaming service.
Okay.
So we're going to talk a bit about them later. About they were saying 1 week we need to focus, and then what feels like a massive lack of focus.
Well, Jesus, and then the TVPN acquisition, which we'll talk about in a minute. But I think let's go back to the headline. The headline, which is the revenue figure, because I think we've been talking about this a lot, which is to justify the trillions and trillions of capex that is being spent. You need to, or it's certainly hundreds of billions. No.
It's 600 to 800 billion this year, isn't it? The capex
exactly. It's going into the ground. You need to believe that the revenue, like AI revenue, and therefore AI gross profit and contribution from AI, can reach the trillion, let's say 1 trillion total in revenue. And actually, only a year ago, Anthropic was doing $1 billion ARR. Well, they're now doing 30. They were doing 10. They've gone up 3x in Q1 alone. So if they did 3x in Q2, then they're at 90. Then they do 3x again. Then these numbers, start to get very, very big, very, very quickly.
Well, it has to, the story this year has to marry to the IPO story, because if SpaceX, Anthropic, and OpenAI all go out, let's say 26, maybe Q1 27 for OpenAI, there needs to be somewhere between 200 billion and half a trillion in it, whatever. I don't know what the float's going to be for the IPOs, but there needs to be enough cash in the system to be able to justify the valuations.
That's a capital markets question, which we can maybe talk about in a little bit. But the general just point is, if you look at the revenue ramp, that is starting to justify the payback, or trying to justify the investment in the capex and the equity of these companies. So I think
Do you think they'll do it? I think we're going to see some stalling.
If the IPO market window opens, I think they'll do it. I mean, look at this growth rate. It's insane. It's insane.
Don't you feel like it's capped? It feels like we are going to hit a wall. It doesn't feel like it's going to be. I mean, we've been talking about this with Nvidia specifically, haven't we? It's like every quarter they break their numbers, and every time we look at Anthropic's numbers, they're doing better than anyone could ever imagine. So it just feels like there's a wall. It feels like there's a wall coming.
Well, I don't know. The penetration is still very, very low. And, you look at the growth that they're experiencing in Europe. It started in the US, it's in Europe, but there are corporates all over the world. I really think there's still a long way to go here. One thing to note is that on the gross profit side, gross margin side, that's actually coming in at about 40% rather than 50%. So I guess they're going to spend the next 6 months trying to move that up ahead of the IPO. There's definitely a kind of so hot right now aspect to Anthropic versus OpenAI. If you look at the secondary market, and remember, so let's say that we just talked about the run rate revenue being more or less the same. Anthropic's got actually a higher growth rate. But if you look at the valuations of the companies, and according to the last fundraising round, the OpenAI last valued at 850 billion, Anthropic at 380. So actually they are, OpenAI is more than double the valuation of Anthropic. If you look at the secondary markets though, the demand for OpenAI has come off a cliff. And that's actually trading at a discount now to that headline valuation. Whereas Anthropic, there's over 2 billion of demand in private markets for Anthropic stock. So Anthropic is trading in private markets from what I can read at a massive premium to the latest fundraising round. So the valuations are converging. That's for sure. Anthropic is having a major moment. So it's funny how these play out from week to week, because 2 weeks ago when Trump was slamming them and calling them supply chain risk, then suddenly, you suddenly felt that this might send shock waves through, the buyer universe. But clearly,
that inertia is still yet to hit. Do you think?
No.
Do you think how much of this is?
Well, I think Anthropic is positioning itself nicely. Like it's way more enterprise heavy than OpenAI. It's found its positioning much, I think, more cleanly in the market than OpenAI is still. And even though, despite efforts to focus and centralize around a certain proposition, OpenAI still likes to break out and do things that contradict that. Whereas I think Anthropic has a much cleaner narrative and equity story, quite frankly, from an investor perspective. And to be honest, I think it's got a better product. So,
it has, but how much is a question for you? How much do you think is values, ethics, and alignment? Because there's a big story coming out about Sam Altman this week in the New York Times. There's obviously almost the anti-Trump brigade going, okay, fine, if you're going to call them a supply chain risk, then that's the reason we will work with them. And I wonder, what is values, ethics, alignment?
Well, I think it's hugely important, and I think it's playing into Anthropic's hands at the moment. If you look at Sadiq Khan, bless him, courting Anthropic in London, but certainly for a European looking at what's going on in the US, Anthropic being bashed by the Trump administration for drawing a line at being used in autonomous killing systems and in surveillance of your own population, that resonates pretty strongly with the European buyers, I would have thought, and also probably European talent. So if you want to come to Europe, build offices, and they've got now offices in a bunch of tier 1 cities now, hire good people, probably going to have a better job of it than OpenAI potentially. So I think there's going to be many twists and turns in this narrative yet, but certainly Anthropic has the upper hand. And then I guess we move to Mythos, which is this general purpose frontier model with strong agentic coding and reasoning skills that they have, that they put out this week with a focus on cybersecurity.
And it's not incremental, is it? This is.
I don't think this is incremental. And actually, looking at, I think there was one thing I was reading, which is very, very scary. Which is, so in cybersecurity, you have a vulnerability and then you have an exploit. So an exploit is something that exploits that vulnerability. So you have a vulnerability that's sitting there in a code base, but then an exploit is actually an action that exploits that vulnerability. And if you look at the historic models, Sonnet 4.6 had a 4% exploit to vulnerability ratio. So of 4% of the vulnerabilities that it found, it could exploit 4% of them. Opus 4.6 had a 14.4% exploit to vulnerability ratio, and Mythos has a 72.4% ratio.
I was looking at benchmarks. I was looking at even some of the weaker benchmarks, and they're like 20 points ahead. It was like quite crazy how impressive this model is.
It is. I think it's scary, and I think definitely cybersecurity is going to be a major thing on the landscape for all of us, both offensive and defensive.
Well, I read yesterday that AI-driven cyber attacks are up 1,500%. So I don't know, that was a kind of a skim read as I flew past an article, but even if it's part true, that's quite scary.
Yeah. And then if we move to health and life science, you talked about the acquisition of Coefficient Bio. So this week, Anthropic announced the acquisition of Coefficient Bio for $400 million in stock. This was in Anthropic stock. This was a company that was only founded last year in New York.
Did you see it?
Only had 6 employees. No. So Coefficient was a incubation by a VC fund called Dimension. So Dimension Capital is a US fund. I know a couple of the GPs there. Only founded in 2021. Spin out from Lux Capital in the US and London, and in New York, the deep tech fund. And Dimension focuses actually on this very area, which is the intersection of biology and AI and software and technology. So there's what the kind of, it's a little bit inside baseball, but people in the industry call tech bio, right? This kind of new age, people in hoodies doing biotech, basically. So you replace the old school dudes in the lab coats and the funders wearing the tweed jackets, and everyone's wearing a hoodie. And that's basically
they don't move fast and break things, right?
Yeah, and as you know, one of my friends calls it, it's basically kids do bio effectively. So it's applying, move fast, break things kind of methodologies to bio, and uses a lot more software and AI in your discovery processes. So I mean, there's huge companies like Recursion in the US, Exscientia in the UK that have been built off the back of this, and we're only just at the beginning of that in terms of the intersection.
This is 400 million in stock. I mean, this is a big ticket.
Big ticket. So actually, it's a really, really interesting. If you want to kind of geek out on the details of it, is that so Dimension incubated this company. They pulled together 3 executives out of Roivant, Evozyne, and Biogen in the US. Pulled them together and worked on the company, which was working again at the intersection of technology and biology. And I think Dimension put in a $10 million check, and they own just over 50% of the business. So they're going to get.
Wow.
The 400 million, they're going to gain 205 million in Anthropic stock, which we know is now doubling.
That's not venture. That's venture building, right?
It's proper venture building. Looking at it here, Dimension reported a 38,000 IRR on the investment from last year. So I think if that's they turned $10 million cash into the company to 204 million in paper and Anthropic. At the current Anthropic valuation, I believe. If Anthropic valuation doubles or triples in the next 6 to 9 months, which it really should do, and we just talked about that in the context that it's valued less than half of OpenAI, probably Dimension is sitting on something like a 60x return there. And their fund, I think, is 500 million.
Here's a fun fact that I was going to share later with you, was that none of the 2025 major IPOs increased in value. They all lost value when they went public.
Yeah, well, I mean, that's the story exactly. But so first of all, it's a great venture story. Actually, the guys at Dimension came out of Lux Capital, which itself very, very highly respected deep tech fund in New York, has done a lot of very successful incubations over the years. But it's a really, really cool story, and it also shows that Anthropic is really doubling down and not willing to cut back or skimp when it comes
What
to
did they
making
buy?
acquisitions in this space.
What
Bought a
I'm
team.
assuming this is
They
an
bought a
acqui-hire,
team, and
right?
like
Okay.
they basically bought a team. I was like, they paid for it in stock. So it's like it's $400 million in stock of a company that's valued at 400 billion. It's like the dilution is like nothing. I mean, what is the dilution?
Yeah.
0.1%?
It's just funny to think in those monetary terms being.
Yeah, but it is.
you
It's
know,
it's
contextually
0.1%
so small.
dilution. And so, and also the context here is that, so as a reminder, healthcare spend is roughly 20% of US GDP. It's like probably the biggest standalone like sector in the whole US and almost globally. And Anthropic recently, they released Anthropic for healthcare and Anthropic for life sciences at the end of last year, beginning of this year. So, they're going and leaning big into the space. So I think it's set against that context.
Well, I think they've got such momentum. Anthropic. I mean, there are more stories that we haven't gone into, but it was almost a week full of Anthropic stuff. So very, very interesting.
It was, and the funny thing I would say, because I've talking about my own companies here. We backed Bowyer, which is working in vertical AI for clinical trials. That raised the biggest Series A that Iberia has ever seen, I think, at the beginning of this year, 52.5 million. It's scaling incredibly quickly. But Pedro, the founder there, put out a LinkedIn post this week saying he gets asked every single day, like, won't Anthropic just take your business? Like, they'll just crush you. And he clearly that is a risk for the business, or is a theoretical risk for the business. But ultimately, when he tests his model and his product on the problem that they're working on planning clinical trials, it is infinitely better. And of course, that is a highly regulated space. People worry about wrappers on these LLMs and how they're ultimately going to get eaten and crushed. But when you've got the wrapper actually operating in a very specific, like highly regulated domain with a lot of relevant context, that's only actually the general LLMs do not perform anywhere near as well, right? So I think it's just something to bear in mind. So anyway.
Well, that's also part of Europe's moat, isn't it? The regulation piece. I think there is something in a little layer of protection for those operating in Europe and understanding.
Well, and actually companies that can build, products that actually take that into account and can deal with it is for sure that they have a right to exist.
Let's talk about Jamie Dimon, JPMorgan CEO. He released his annual shareholder letter on Monday. It's a big letter, 48 pages, against the backdrop of hedge funds making their biggest bets ever against European stocks. So they're shorting Europe. Every year he lays out what he thinks is coming, and we're going to go into some of the content anyway, just quite naturally, but I wanted to specifically look at historically what he gets right and historically what he gets wrong, and see if there was a lens there to look at this current letter. What he normally gets right is the structural stuff. So the multi-year core structural stuff. He warned about the US fiscal deficits from 2013, said nobody would act, and then it became a crisis. Debt has more than doubled. He flagged the fintech disruption years before Wall Street or anybody took it seriously. He warned about the held to maturity accounting that gave banks a false security on interest rate risk. And that was, I would argue, the biggest reason why Silicon Valley Bank died. Where he has historically got things wrong is timing and dooming. So in 22, he warned of an economic hurricane. By October, he was then warning of recession, and obviously didn't come. He was then warning of recession for 4 consecutive years. The economy has been resilient and has defied him every time. One investor says his track record on leading the bank is incredible. His track record on economic calamity predictions, not so good. Although that's the best way to be, because I think everyone forgets, which is part of the reason why I wanted to have a look at his record. As with everything in our industry, it's all timing and luck. So maybe it is just a piece of timing and he will be absolutely bang on the nail. But one thing which you've already mentioned, which I think he is absolutely on point with, is inflation. He calls it the skunk at the party. The Iran energy shock, meaning stickier inflation, high interest rates, and supply chain reshaping, which I think is going to be, to me, that when I was at the front of the show talking about the mid-term issue, I don't think it's going to hit it straight away, but this is going to be super problematic, I think. When the straits were closed, oil spiked to $120 and banks postponed rate cuts, which I think is the first ripple. this current ceasefire, which by the time this pod goes out might all be over. I know we've got Israel, Lebanon, so we who knows what is going on as we're recording, but that is going to complicate the picture. But markets are surging, right? So three other things that he did mention. He mentioned private credit. He warned that the $1.8 trillion market lacks transparency. That's going to be problematic. If it tightens, it's going to hit venture, debt, PE, PC is already in trouble. That's global, but I think we're going to see more in private credit. It's going to be problematic. On the trade side, he's basically gone against Trump and he said, look, we need to get Europe inside the preferred bloc. I don't think anyone's going to disagree with that, but I don't think Trump's going to change his tune. On AI, he calls it not a speculative bubble. No great shakes there. But what I didn't know is JP is spending $20 billion a year building stuff in-house, which is no small ticket. And I bet most of those services will be outward facing. So I think this is a midterm shock that he's really, really sharing. It's not going to be a short-term thing. And then as a founder or an investor, how do we think about that? Have we got 12 to 18 months? Is raising going to be harder? Should people extend runways? Venture and other debt instruments, are they going to be problematic? Should we always look at the US as the default market? Will tariffs or other geopolitical issues mix up on that front? As always, I know what you're going to say to me, heads down and build, which I totally agree with. But anything in Jamie Dimon's letter that you would pick up on?
Definitely heads down and build. This leave the macro stuff to Jamie Dimon. I think the things to pick out from, which you've already elegantly touched on, is their use of AI and the value they're getting from it is very, very powerful. They're spending over $2 billion annually on AI and already achieving a match $2 billion in direct cost savings. So it's neutral from a kind of cost perspective. So I think that's an interesting observation from one of the biggest corporations in the world. Back to your point, Dan, about adoption of AI within enterprise. I do think that inflation is probably the biggest thing coming out of this. Not coming out of this letter, but it's the biggest thing that he's flagging, and that will have a knock-on effect. Potentially interest rates for valuations, asset valuations and prices. And then there's a lot of talk in the newspapers, in forums around the private credit bubble and structural issues within that. And Dimon is right to point to that. The private credit market has grown fivefold since the 2008 financial crisis.
If people aren't on super au fait, this is the non-banking lending and the lack of transparency around non-banking lending, which is, we've seen a few banks in the States go bust. There is trouble at mill when it comes to private credit.
It's generally funds that pull together.
Also the funds a bunch of them all stopped.
Stop redemptions. But, the default rates typically around 2-3% from the actual borrowers, to the funds that lent them the money. But they are potentially spiking up to 8-9%, which then creates a much bigger issue for these funds. And, for them to recover, not only make the rate of return that they promised to their investors, but also recover the capital they've lent to them. However, this is a roughly $2 trillion problem. It's not anywhere near as structurally integral as the 2008 financial crisis. So,
well, it's not subprime, but it does feel like this could be one of the strands in a broader story.
Maybe that's a $2 trillion. I mean, look, the U.S. public equities is $68 trillion. I just think private markets equity, so private equity and VC is probably in the U.S. is probably, I don't know, 10 trillion. So I just think private credit, it's big, but it's not going to bring down the whole house of cards.
But private equity isn't in good shape. I mean, I don't know how many. What are their extensions funds called?
Say it's not in good shape, but it's about to sell a shit ton of assets into the public market now. So,
yeah. As usual, AI has saved the day, right? I mean,
very true. Yeah.
Let's talk about IPOs. So I was looking at who is going to IPO this year and when. The IPO pipeline is huge. Just to pick up on the three biggies, we've got SpaceX. They confidentially filed with the SEC looking at around a $2 trillion. That number changes, so it might be 3 by the time Musk has finished, but it started, I think, at 1.2. Then I saw a 1.75. I think it's now at about 2 trillion. Looking at June, OpenAI is looking at Q4 or Q1 next year at an $850 billion valuation. but their cash burn is 14 billion. So they're looking at a cash flow break even in 2030. And I guess the IPO, that would force some kind of transparency on that. So I think that might be semi-problematic for them. We'll have to see. Anthropic is in early talks with the banks for a potential October listing, looking to raise 60 bill. European pipeline is a lot thinner. We've got Revolut. Are they going to do a dual? Are they going to list on the New York? Are they going to list in London? I can't see why they would list in London. Databricks closed at Series L, 134 billion expected to list. Helsing is our great European hope. They raised privately 600 at 12 billion valuation. I don't know if they're going to go. Do you know if they're going to go in 26? I don't think they're going to go in 26.
No, they could do. I mean, they've been winning. The business is starting to support that. They won a potentially up to $1.4 billion deal with the Bundeswehr in Germany in February this year. So Helsing, maybe.
So maybe.
Maybe.
Yeah, maybe. Okay, we'll put them on. We need.
I mean, if we were really clutching at straws, we'd say that Databricks has a European story. As one of the founders there was originally from Sweden.
His mum's cousin's sister was born in Belgrade. Yeah,
exactly.
Unitary, the Chinese humanoid robotics company, they're filing in Shanghai. So I was looking at how much capital is going to be required to service. Let's just look at SpaceX, OpenAI, Anthropic. Depending on the float, it wouldn't be a standard 15%. I'm assuming it would be a much smaller float, but it could be near $500 billion of new public equity issuance competing for the same institutional allocators. And then I was thinking, these are the same bodies, people, institutions, family offices that would be investing in venture funds, and obviously including European venture funds. So there's going to be a big draw somewhere else without as many eyes on us, which is, I think, problematic. Will these mega IPOs reopen the market, or will they drain it? Where is the challenge or opportunity for European markets? You could argue this is also an opportunity for us. And I've already shared my fun fact, which is every major 2025 IPO traded down. But what would you look at out of the IPOs? Anything you'd kind of poke in?
Well, I don't know. I mean, not to start on a down note, but you talk about opportunities.
Europe, I mean, bring it on.
Europe can't even. I mean, Europe in the latest IPO news in the tech market in Europe was that Visma, the SaaS company, pulled its IPO in February this year. So we can't even list a SaaS. I mean, we're kind of having
raised $4 million.
No, to be fair, that is the big. Visma is a $20 billion company. At least it is valued in private markets that way. But we couldn't even get that away. However, I think it's interesting to talk about the ability of the public capital markets to absorb the primary capital being raised by these companies if all of these IPOs happen in the next 6 to 9 months. So to set the context here, in 2025, the total US equity capital formation, i.e., amounts of fresh capital raised in IPOs, was $231 billion. That's the whole of 2025. If you take SpaceX, OpenAI, Anthropic, that potentially is about 240, 250. I think you said maybe $500 billion, Dan. I think it's more like 250.
It depends on the float. The numbers I was looking at were somewhere between 150 and 450, but it just depends on.
I'm talking about the primary capital being raised, right? So anyway, again, as I said earlier, the public capital markets equity is huge in the US. It's 68 trillion. So we're talking about here about a few $100 billion. So the market is big enough, but that is a lot of capital that needs to be raised when you look at the historic amount raised and absorbed by the market every year. So I think that's one of the reasons why there is rightfully a race to get these things away, and actually why Anthropic is now guiding towards October, whereas OpenAI is more like potentially early 2027. I think Sam Altman is on record as saying he is 0% excited about becoming a public company. I do think that is going to be something to watch. And I mean, Elon wants a third of the SpaceX primary to be picked up by, or stock to be picked up by retail, which is quite a lot, which, would be very, very democratic of him.
And he wants all his bankers to download Grok, or so I read some silly something like that.
But the IPO part actually is pretty cool. You got those 3 companies. You talked about Databricks, which is an absolute beast now. slightly more old school these days, Canva, although I think they're trying to pull together an AI
Who are
story.
these SaaS providers? Although Canva I've seen is obviously moving seriously into the AI sphere.
No, of course, yeah, exactly. And my favorite absolute avid user is Strava, looking for an IPO this year.
Are they?
Yeah, and Revolut, as you say, is the main European story there. Actually, I heard a little bird on the told me that secondaries on Revolut are now more like 120 billion. So actually, I think that the 75, 80 billion.
Well, I saw it. I mean, it was only 6 months ago. I was reading 55, and then
no. I mean, it's
today
definitely close to
75.
100 now, but it may well be
Yeah.
well over that now. And we're going to, and most importantly, we're going to need to change the name of the Mag 7, aren't we?
What have you got a new acronym for us?
Well, I mean, it's slightly mixing, but I thought if you add Anthropic there, it would be the Mag 7, but then it's basically the Mag 10 now, isn't it?
Trump will have it. Is it?
Yeah.
Mag
10 maybe. Or you have to displace. Where does the money come from to buy the shares in these companies and to both at the primary and secondary in the IPOs? Like, well, people are going to rotate
from somewhere else, right?
Exactly. Correct.
Where's it going to come from? I mean, who would you,
Tesla? I don't know. Could be right pocket, left pocket for Elon Musk.
He's fine with that. He'll just bundle it in over a period of time. It'd be fine. I read an article titled, "Will the Iran crisis derail the energy transition?" And that made me think, what has happened to climate tech, sustainability, ESG? Because since, I think, I would argue the first or midway through the first Trump, 18, 20, it felt like America took the energy and the drive out of solving climate, talking about sustainability, talking about ESG. So reading this article, I was thinking, well, actually, I would imagine most European countries especially will be thinking in the opposite. They might not be calling it climate tech, sustainability, ESG, but they are going to absolutely be thinking, how can we become energy independent? How can we not talk about green initiatives, but just talk about resilience and security more than anything else? So then I looked at a bit of the numbers and it kind of makes sense. So 25% of S&P 500 firms use ESG in their report titles, which is down 40% from a year ago. In 1973, the oil crisis gave France its nuclear program. That was what kickstarted their energy self-sufficiency. In 79, it's been well documented that it drove Japan's efficiency revolution. So these were all oil shocks. So looking at what Trump has accelerated and the Iran oil shock, people are now talking about decarbonizations rather than energy security, emissions rather than, so resilience instead of emissions. So the naming conventions have changed, and it's probably not a bad time to pile back in. And maybe this is an obvious thing to say, but renewables are a geopolitical asset, not a cause. I also didn't realize that climate tech VC has actually gone up. In 25, it was up 8%. I always assumed it would do the opposite. Small fly in the Chardonnay is going to be AI. Obviously, AI is an incredible energy sucker. We don't have enough energy to provide energy to all the data centers as are on the books. But obviously, AI is part of the solution. So there's two sides to the same coin. Fun fact, 87% of US companies quietly increased sustainability spending despite the political headwinds. They just did it under different naming conventions or did it quietly. So I think there is a lot to be said about getting into this, but I don't know if you have any thoughts or challenges on this whole green energy, ESG, climate push.
No major challenge. I think there's two things at play there. One is the fundamental, like what does Iran remind us of that fundamentally needs to change over the long term? And I think that is still the need to, it's not necessarily just to purely decarbonize everything. I think it's to take control over.
That's all it is.
Yeah. And if you look at, I think long term, and I haven't got any stats to back this up, but if you look at electricity usage over the next 50 years, both the absolute number, the number in absolute terms and the proportion of it that's going to be absorbed by data centers is going to be astronomical, right? So the need for electricity is going to increase exponentially.
I'm not with you on this one. You know that, right?
No, why are you not with me on this one?
Well, I'm not. I just don't believe the scaling laws are going to offer.
Hang on a
they have
second,
the-
Ben. Right. Okay. Sorry, I'll hear you out.
Well, no, 'cause we've had this debate before, and I know we're slightly on different sides of the table, and it just feels like the efficiency in coming down the path for infrastructure is not going to demand the same level of compute.
No,
And
disagree.
it just feels like we got, yeah, I thought you would. We got two, I feel like we got two diametrically opposing forces.
You and Mads invest in, physical AI, like industrial, like as all of those factories become automated and roboticized, that I'm afraid is going to absorb a tremendous amount of energy. And even though,
I don't think so. I think a lot of it's
even
going to
though
be
we can
local.
be extremely efficient, I still think you're going to have a huge amount of electricity is going to be given over to all of this,
We will see.
the automation economy. But my point is this: you need to have control over this, whether it's carbonized or not. Ideally not. Even
It will be
the
to start with, though, won't it? I mean, people are firing up coal. They're doing all kinds of
in the short term, there's kind of short-term
school.
scrabbling around now.
Yeah.
So I do think that is an eternal theme, secular theme for our age. But there's also the next thing. Second point is around trends and investment trends and what works, I think. And 5 years ago, climate tech was very in vogue. Now it's not. These things go in waves.
And naming conventions change naturally, although
Yeah,
these have been accelerated, right? I mean, this has been a complete. It reminds me of that. I think you might have raised this before about the change in dialogue around every time Meta or Google or somebody did something silly in Europe, they were being fined under the regulatory banner. And I think it was the Spanish PM that drove this initiative where they started talking about children's safety rather than regulatory failures of big tech. And it just reframed the conversation completely to talk about kids' health rather than regulatory flumpery. And it just changed the dialogue. And I think with this, I think we are changing the dialogue to resilience, right?
Into a public health issue, which is a probably easier one to fight people on. I think part of, like, if you're in venture capital and even in public markets, but you ultimately need somebody to buy or keep funding the thing if you're an investor or if you're a founder. And sentiment is a big player here. So unless you have the benefit of evergreen permanent capital and can keep funding your projects through up cycles and down cycles, you're always going to be subject to the vagaries of the markets.
Let's talk about Germany rearming. This is one of yours. It was quite interesting reading about how Germany is trying to spend. I was going to say spending. They're not. They're trying to spend 10 billion on 6 warships. But the whole procurement supplier relationship has broken down. The program is 4 years behind schedule. The prime contractor has been fired. They've now agreed to build some smaller vessels, not the warships, but some smaller frigates as a stopgap. Germany is going from 86 billion to 152 within the next 3 years. But I'm positing that the traditional defense industry can't absorb the money. So I put in brackets here in my notes, foie gras defense spend, when we were talking about foie gras VC about a year ago. So is this an opportunity for startups? Can they build the software layer, help defense procurement actually work? I also saw this week that the EU has just launched the Agile Fund, which is 115 million euro. I think it's just purely grants for defense startups. So no 18, 24-month delayed nonsense. This is a 4-month turnaround from application to grants for defense startups in Europe. And there's 115 million in the pot, which I think is really cool. So there's this whole speed quotient coming in about this is rearming Germany, but obviously this is Europe wide. But what did you, because this was yours, what did you want to talk about on this topic?
A couple of things to talk about. So one is, I think this is an old world story where the traditional method of procurement in defense was we would go and spend $10 billion on 6 frigates or $3 billion on an aircraft carrier to both project power around the world and also feel good about ourselves. And also because we think that is how warfare is best conducted. And this is how the best budget is spent. These would be like long 10, 15, 20-year projects, range in the billions, involve consortia of companies. In Europe, you have them across geographies, across countries, which also creates a sort of a second tier issue. I think in this case, the frigates were being built by a Dutch shipyard. So then you have like Dutch-German relations. The software was actually from Dassault Systems, the French company, which is being blamed. So you get into a lot of finger pointing, a lot of jingoism and nationalism around this, which is definitely unproductive. Whereas now, as we've seen from the Shahed drones in Iran, the Gibran drones in Ukraine, these so-called kamikaze suicide drones, and we've seen it with small robots instead of $30 million tanks. We are in the age of what some people call cheap warfare, the fast fashion, where you can imagine if you took this $10 billion budget, you could create millions of small, fast, agile,
do you think
retractable
the
drones.
German government is actually...
Well, they're going to reallocate this to a German yard, and it's probably going to end up costing way more than 10 billion, and they'll get their frigates. But my point is that this is it's a hangover of the old world of military procurement, and I think Ukraine a little bit the Straits of Hormuz, but certainly the Ukraine war is now moving people forward into this more agile, swift turnaround, highly iterative, software focused, autonomous.
It's been gamified.
Yes. And in a way, when I talked about biotech earlier and the difference between biotech and tech bio, you can almost draw an analogy between, old school defense procurement and like new school defense procurement. One is very software based, one is very roboticized, one is very automated, one is very iterate fast. The other is very slow, clunky. So I think that's very similar to many, many things, but certainly we are in the age of rapid iteration, and defense procurement has not caught up with it yet.
Very quickly, OpenAI has bought TBPN. What do you think about this?
Well, TBPN, for those who have been living under a rock, is the news channel on YouTube that has exploded in the last year, doing live shows.
It's not that old, right? It's only 18 months old. This is
a
young...
it's a couple of dudes who founded
founders, right?
1,000 YouTube subscribers. Has basically become, the Bloomberg for Silicon Valley, famous for its newsreel, style, scrolling across the bottom of the screen, and real-time interviews with founders. And it's basically Silicon Valley's news show. And OpenAI, who just talked about...
Do you know
sorry?
They do 3 hours of live show per day.
Yeah, it's a really cool format and medium, and innovative, and in terms of new media, and great job to these guys who set it up. But they have just been bought by OpenAI, who have just been talking about having focus, have just spent low hundreds of millions buying a 1-year-old media startup. And so, again, like, what the hell's going on at OpenAI? I mean, the critics are basically saying that, there's no coincidence in an IPO year that they actually maybe want to use this to try and control the narrative.
And they've said the opposite, right? They said, no, it's going to be independent. We'll leave them independent. It's like, no, that's never going to happen. I will very quickly share my prediction with you before we run. Mine is probably quite obvious. Anthropic becomes Europe's AI partner, not openly or overtly, but here's my prediction. I think they will, almost by nature and in stealth, just over time, just slowly become the... So you've got the US stuff going on over there. We'll have China and the Asian markets doing their stuff down there. And I think Anthropic will become our partner of choice. And we'll see that across governments, across enterprise, across small business. I think that's going to be the end point. Quickly, deal of the week. So mine was the Zero Shot Fund, the OpenAI alum, who've been quietly investing, I think, out of 100 million fund. I thought that was quite interesting. Have you got a deal of the week?
Yeah, I do. A big one, actually. German, Gilead, a US pharma company, has bought a German biotech startup for 5 billion, 3.15 billion in cash up front, 1.85 in milestone payments if milestones are hit. That's a 5-year-old startup working on ADCs, which are antibody drug conjugates. That's an amazing... Yeah, the company had only raised 600 million. And so I think it's a great result. High Tech Gründerfonds, the German deep tech fund, who seem to be across many early stage deep tech deals in Germany, were the big winners there. It's the first investors. So
I think that's it. Everything on the docket.
Done.
We are done. Look at that. Look at us as a duo.
Look at that discipline. Look at that
Look
discipline.
at that,
Yeah.
doing it, killing it. Thank you very much, my good man, and we will catch you all next week.
See you soon. Bye.